Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:50 p.m. Eastern Standard Time on a slightly cloudy but absolutely very pleasant summer evening out here on the New York waterfront. Thank God and bless America. Um, Evenings like this, I feel like just sitting out there instead of doing a webinar. But hey, this is what we do, right? And it's always great to have the company of great people like yourself. So on that note, we shall begin the Sunday webinar. Uh, Full disclosure, this is purely for financial education, not for any solicitation or advice. Session will be recorded, uploaded to the Clueless Day Trading YouTube channel. Please make sure you subscribe to it just by simply adding your email so you're notified anytime I'm putting out a actual video cast or my video blog or whatever you call it on my YouTube channel, and spread the word around. Anyone can review it. All the free videos are there available for everyone to see, and you can see what we do and why we are overall our performance is significantly higher than anything that's out there. On that note, another very important reminder. I know I was kidding around on Friday and Thursday, but honestly, every one of you attending tonight and every one of my members who's going to listen to this, you have to subscribe to the Clueless Day Trading YouTube channel. Why? Very simple. For your own benefit. Highlights of trade highlights, things that we do during the day, not the full thing, but things that matter are all on the Instagram YouTube channel. That's the performance record overall. All right. There are quick 60-second videos also that are put there by my marketing director, who's doing an absolutely amazing job, and it's only going to get better and better. Now, some people say, "Oh, I don't have Instagram." Well, who the heck cares? Just create an Instagram and just follow, and get all your friends, family, colleagues, anybody who knows anything about who knows that there is something called the New York Stock Exchange to follow. Really, please do it. We need a big follower count so the algos on Facebook pick it up and just run it through. All right, so please do it. It's the least you guys can do. All right, it doesn't even cost a penny, and it helps you guys too to review stuff at the end of the day. All right. On that note, let us start off with the technical stuff. So what you're seeing behind you, as I normally do, is to give you a broader picture, and then we're going to get into some stocks. I will certainly entertain a couple of quick questions on individual stocks that you guys would like to see, and we'd like to keep this within an hour, which would be helpful, so others don't get bored out of their mind, going through a 2-hour long video cast that has happened before because people have asked a lot of questions. All right, so let me just do a quick roll call, make sure everyone has audio-visual connection. We have a great returning member, JPC, yes?
Yes, I'm
excellent, here. Excellent, okay. We have terrific trader, Lisa.
Frank.
Excellent.
Hey, Frank.
Excellent, thank you. We have my good friend, Mike Harrington. Yes, okay, great. We have Todd, new member. Hi, Todd. Okay, Todd's probably scuba diving right now. That's fine. No problem, man. As long as you can see, hear my voice and the video and the screen in the back, it's great. We have a terrific gentleman, Walter. You're in.
Yes, sir.
Okay, thank you. And we have another great member, new member, YBI. YBI, you probably don't have a mic, but you can certainly type in. And when you do type in, then go ahead and.
No, I have a mic. Hi.
Oh, there you go. Everyone here's YBI. Hey, great. Thank you for joining. Great. All right. So so a couple of things before I start. Look, guys, let's face facts here, and please, everyone, mute their mics so I don't hear the background hiss or noise. So here's the thing with the markets right now. The markets are as dangerous as ever. Let me just tell you that straight out. All right, it is as dangerous as ever. The risks in the market are exactly the same. I put out a fantastic article that everyone should read, because the only articles that I put out there are the ones that make the 3 brain cells still left in my head just go, whoa, and I want everyone to feel the same thing. So the one that that really caught my eye, one of them that caught my eye, was written by I believe it is a Bloomberg story. Yeah, Bloomberg. Yeah, it says Wild Week was just like all the others in a near record bull run. Same old story. That's my term that I put out there, and it's a fact. Remember, reporters are meant to write. Some reporters are smarter than others. They understand the market. 99% of reporters, just like the way 99% of retail emotional traders, have no frigging idea what's happening in the stock markets. We do, because we track tactical charts and then my quick analysis on things that are behind on the background. It's like a kabuki theater, right? Or like a Broadway theater. They're changing in the back to come for the next scene. So we want to know the actors. We want to know what the next scene is. So this is a terrific article, because what this gentleman did on this article is that he explained, like, this is nothing new. And this is exactly what I keep on talking about. There's nothing new what's going on with the markets. The markets are in a major uptrend. And we're getting close to a pretty sizable tradable top where the markets are going to drop from. Now, they're not, hopefully they don't drop 2,000 points. Hopefully they do, and we're prepared. And we make $1 gazillion. As long as they don't catch us blindsided, right? So this is a terrific article. So please read it. And because all you hear in the news is like, oh my God, look at this market. You know, we're all, you know, I have them copied and pasted a lot, not on Twitter all the time, but greatest day in the market since April. And the next, and the following day, worst day in the market since April. Who cares? In between that, we are nailing multiple big, huge trades. We're being selective. Not every one of the trades are going to work exactly at the right time, but they work. They work big time. The swing trades work big time, and everything is archived. I have every single chart archived. And what I'm trying to do, which seems to be kind of a daunting task, is put all my charts in some sort of platform, because the website, it's just difficult to handle. So maybe a Dropbox kind of thing where you guys can go and look back at a chart from 4 months ago, what I said, and say, whoa, look at that. But saying all that, please certainly do that. So coming back to the markets right now, all right, the risk is the same. We got the China trade tariff war. Yes, the Chinese are coming this Thursday. And I was talking to a great member this weekend, and we were sharing some thoughts. I'm not going to name names, who's a terrific ACS coaching student and a great trader, and uses her, well, I only kind of give a hint, her own style and indicators and stuff, but uses me as a very effective tool on doing her trades. And that's the way I want all my members to be. They need to use their own style and use me as a very effective tool. And if they match, go for it. Go for it. Because what I try to do very simply, as you guys know very well, as we flip through the charts, and we're going to go through these. This is the shortest term, which is a 15-minute that I look at, the 1 hour, the daily. And these are actual, this is actual real-time movement happening right now. Futures are up roughly about a point right now as the Asian markets open. Chinese markets are going to open any minute now. So I want people to use a combination of their own thing. I want people to be independent. That's why I don't hide things. I don't say there's a secret method. A lot of the services put out there like, oh, follow my method, buy my ebook, buy my this or that, and you'll know No. I'm showing everything the way it is. I'm explaining to you guys on a real-time Twitter feed, like this, telling you all day long what is going on. And I'm putting down quick explanations of what the patterns are as much as I can. This is literally a walkthrough. This is literally pushing somebody on the stroller, and but there's no secret method per se. And the people who take the one step forward and sign up for the advanced coaching sessions, they obviously understand why the stroller moves the way it moves. Okay? It's a fact. So anyway, so saying all that, markets are going to be as volatile as you've seen. We're going to have phenomenal days as long as you're set up right. They're going to come from nowhere, but we still have a roadmap in front of us to read these massive candles. Look at this candle. This candle is worth billions and billions of dollars. It's not just a candle that looks great on a chart. This candle was a couple of $1 billion on the downside. Everyone just like, oh my God, no one's in the chat room and stuff. Fine, understandable. Human reaction. Markets are not about humans. Markets, the way they are right now, have been for the last couple of years, and which I've been talking about big time. On my website, there are algo articles going back to 2015. Markets going forward are going to get more and more and more automated. Literally, 100% of the trading in the markets on an intraday basis will be completely automated. So if you do not understand the power of these tactical charts, I don't care what the biggest analyst that you follow says. I don't care what CNBC says or Bloomberg or Fox Financial News or anybody says. It is all about the machines. And all I try to do is to remove the emotional element as much as possible, so that we can read the signals before they happen. And that's the whole mission statement of Clueless Ape Trading. I don't BS you guys. I don't make up stories. I say it the way it is. I'm very direct. Some people get a little annoyed at times. It doesn't matter. I love my wife to death. We've been married. We're going to be 21 years coming this February. And she looks hotter than ever. Trust me. Okay? And does she yell at me? Does she put me in like marital boot camp sometimes because of of some silly stuff? Sorry, I don't cheat, so it doesn't really matter. I don't do Tinder. I don't cheat. All right. So the bottom line is, because it's not worth my time. Worth my time is making crap loads of money trading John Deere and Boeing. All right. So my point is, yes. So I'm exactly like that. I'm not going to entertain bad habits of emotional traders and just say, oh yeah, it's okay. You can. It wasn't your fault. It was your fault. Just the way I tell myself, it is my fault if I'm not capitalizing on my own unbelievable content that I'm putting out there and maximizing the profits. I slap myself, a lot of times during the week saying, why did I sell the bulk of the position a little bit too early? Because I tend to do that a lot. Why didn't I put as much as I could have on a major reversal trade that goes up 14, 15 points? John Deere, which is the most recent example. And, why do I sometimes hold on to a swing and then say, oh man, I should have sold there? So all of these things, you guys have to question yourself, because your biggest competition and your biggest joy is yourself, not anybody else. It doesn't matter what other people are doing. Like Machiavelli said, he who travels fast travels alone. You guys, trading is a solo business. Yeah, I would want everybody to be on the same boat, but it's never like that. You're not paying my bills. I'm not paying your bills. I'm helping you pay your bills if you really follow my charts. No question about it. But the fact is, you gotta trade on your own. You cannot rely on others to see what they're doing. That's one of the reasons. What I want to point out, a very important thing, that following sweepers, oh, look at that option. Everybody's concentrated on that, strike up there. Yes, it's helpful. It's a guideline. But what do the algos do? Right before it gets to that concentrated position, whether it be the SPX 2900, whatever. You think that's the smart money? I don't think so. Yes, it feels good. Everyone's clustered there. Because I look at the CFTC, Chicago Futures Trading what do you call it, a non-commercial and commercial futures index that comes out once a month, a couple of times a month. And they said, okay, non-commercial traders are doing this, commercial traders, so-called the big boys. Well, big boys are not. Even the big boys are not making that much money. Trust me. We're beating the pants out of them. So the bottom line is that those are useful parameters, but they mean nothing in these markets. In the old days, it meant a lot. I hope you guys understand what I'm talking about. Okay? Following the herd certainly makes money. No question about it. Because the market is a herd mentality. It's going higher. That's called trend following. It's fine. But making really big money is about contrarian swings. And I have shown you guys a lot of them. They are the hardest trades to do. The hardest trades to do. The best trades that you will look back and you say, oh my Lord, I just clocked in 400% on them. 500, and I'm talking real money. I'm not talking about putting pennies in there. I'm putting real money. That actually makes a dent in your financial well-being. Where the $150,000 home improvement that you want to do, like a big sum, or you want to buy a nice used Lamborghini, or you want to do whatever, give to charity, you say, you know what? I did it. I feel good. Those don't come about by following the herd. Let me just tell you that right away. I know it. And that's the reason those are the most difficult trades to buy and to do the setups. Following the trend is reasonably easy. But let me just point out one other thing as I'm scrolling through. Okay, is that one of the hardest things that I have found, and some of you will understand, some of you won't understand what I'm about to say, is when markets are breaking out and major breakouts are happening, to stay in the game. Because every little drop that you're seeing, futures are down, futures are flat right now. Like one big candle like that, oh my God, the world's ending. To stick with a trade, to stick with a bull market, since 2009, March 9, I was sitting at my desk on Wall Street, on Broad Street, right next to the New York Stock Exchange. And I still remember that day. And those weeks prior to that were my some of my big institutional clients and high net retail network clients sold their Apple at $80. I still have that print somewhere in my storage. And Apple has split along the way. They could have made millions, except they sold, just like many of you do, out of recency bias or panic. Recency bias means that as a trader, as an investor, we are always, and I'm guilty of that too, we're always worried about what's happening now. We don't think about the bigger picture. We don't think about this. This is what makes the real money. As long as this and these candles and these channels are intact, and this lower channel is intact, which is approximately, like I've said many, many times over the past couple of days, over the past couple of weeks, more so in the past couple of days, as it's been established that the 2,800 level on the S&P 500 is critical. So the fact is that we lose sight of the big picture. We lose sight of these type of things because along the way we get these. Is this a straight line? Never. This is like this. I'm guilty of it a little bit. Many of you are guilty of it a lot because you completely lose sight of the big picture, the swing trades, buying the tactical lows, doing the setups on a 300-point down day where all the indicators, there's no indicators here. I purposely did not put any indicators here because I just wanted to show the broader picture of the days where I'm showing where the McClellan oscillator is minus 100, where the slow stochastics are showing deep oversold, starting to cross over. You don't see any buyers, just the way you don't see any buyers out there in the idiotic world of media. But those guys are not real traders. They're getting paid a fat check for sitting there babbling, talking heads. I'm not saying like they're doing a bad job. That's fine. That's their job. They're doing their job. Question is, are you guys doing yours? So bottom line is, when it comes down to it, when you lose sight of the bigger picture, you lose sight of everything. You make little scraps of money, yeah, and you're like, oh, I did well, there's always the next time. Guys, ladies and gentlemen, there is no next time. There is only now. Carpe diem. Seize the moment. Seize the moment. Enough of making excuses to yourself that you miss out on all the biggest trades that I'm producing. And yes, there are trades that all of a sudden we get hit with. Even those go up over a matter of days or weeks. I would say a matter of days. There's a lot of stuff going on, okay? You got to figure out what you want to do. The last thing that I'm going to tell you before we get into the chart is risk. Market is risk. Big time. Get back to the fundamentals. Options trading is big risk. So I'm going to put 2, 3 big arrows. Options trading is big risk. You want safe? Don't trade options. In fact, don't be in the stock market. Just go to 7-Eleven or whatever, buy a Twinkies bar. That's safe. Have a Twinkies bar. Have a nice ice cream. Whatever your nice flavor is. That's safe. You want safe? Stick with a boring job that gives you a set salary and somebody else sets it for you. And you go beg to your boss saying, would you give me a promotion? No. Write your own paychecks. Be your own boss. That's what you do as a trader is what entrepreneurs do in startups. Okay? Entrepreneurs do in startups. They have sleepless nights. The latest case in point is Elon Musk, one of the most brilliant minds in the world. The guy frigging told Ariana Huffington, I read this. Ariana Huffington said you should sleep more. He goes, no, that's not an option. My goal is to make Tesla great and SpaceX, and that guy's frigging out there. Okay? No wonder he's a multi-billionaire. You think he gives a care that his stock is down 30, 40, 50 points over the last couple of weeks? The last two weeks or so? That is the attitude you need to have. You want complete safety? Well, get used to making 20, 30% if you're lucky, because most of the times you'll be selling too early. You want to make the 100%, 200%, 300%, 400%. And it doesn't matter how much money you're trading with. Honestly, yes, it does matter, because if you don't have cash on the side, you can't take advantage of and dollar cost average. Yes, that does matter from a scalable standpoint. But it really doesn't matter, because you could be trading with $50,000 in a couple of options. And you get this little red candle, 3 of them, your 50,000 is down to 20. Is down to 15. You think that feels better? Yeah, your 50 going down to 15, or your 5,000 going down to 2,000, because your 2,000 can easily jettison up to 8,000, to 9,000, to 10,000, and I have shown that repeatedly. It's much better, and again, these are just my opinions. It's much better to trade with moderate money than trade with big sums of money when you don't know how to trade. It's like putting a guy, and no offense meant to anybody, driving a Hyundai and putting them in the wheels of a Lamborghini Aventador or a Huracan. They will be wrapped around, crashed, and burned. Not them, but the car will be. Okay, hopefully they'll get out of the car on time within the first 5 minutes on the turnpike. If you don't know how to trade tactical trading, do not trade with bigger money. Trade with smaller amounts so that the losses are minimal. And then you can get back into a $1 call that goes to 4. You can buy a Walmart, recommended. Nordstrom, recommended. PetQ, recommended. Just giving you some recent examples. okay, of earnings and make that up. Because if you had a lot of money to trade with, you'd be losing a lot of money because you don't know how to drive this tactical, algorithmic, high frequency trading market, which looks like this. Okay? You don't know how to drive this. So you're going to be wrapped around the tree and you'll be losing a big chunk of money. Better to lose small sums of money and make that back up than lose big sums of money and get mentally completely damaged. And as I've said in my other videos and stuff, years and years ago, I've lost more money than you guys don't even want to know. And made back a lot more. Write your own paychecks. I'm not asking everyone to be a full-time trader and leave their day jobs. Come on. A lot of you have amazing jobs. What are you doing? Good. Keep the steady paycheck going. My bottom line is that when it comes to trading, do not trade with big money because you won't know how to handle it. And I gave you the analogy of driving. Does everyone understand what I just said? Yes, no, maybe. And if I don't get responses, I'm not moving forward. No answer?
Yes, we understand.
Lisa would obviously answer. Anyone else understand what I just said?
Absolutely.
Thank you. And what I'm talking about is serious stuff. Do not trade with big money, whatever big money means to you. Whatever big money means to you. Do not trade with big money if you do not know how to be or at least honing the skills of being a tactical trader. If your emotions are in charge of what you do not trade with big money. Keep on scalping a little bit at a time. I don't care if you make $100 a day. At least you won't be losing $10,000 a day or a couple of $1,000s a day because the next day you're shot, which you could have made back 5 times more, but you will not get in there. So please, heed these words of wisdom. Got to be a more proficient trader, a proficient driver before you jump from the Camry to the McLarens to the Lamborghinis, and then the final stage, which I'm far from yet, that's my dream, is to buy a Koenigsegg or a Pagani or a Bugatti. Okay? Cars, which you have to know how to drive them. So in the meantime, drive the moderate cars. I don't mean physically, like literally, but drive, as in trading perspective, and make money. Learn the trade before you move forward. Okay. On that note, market's the same. We have the China risk. We have North Korean risk is kind of quiet. We haven't heard the fat man like scream and shout that much anymore. Donald sent him a lot of fat burgers, so he's quiet. He's good, and we're very soft with him, which is, in my opinion, okay. We don't want to fisty fight with Kim Il Jong, we have the Turkish situation, which is a serious situation. I believe it will be resolved. Turkey, if the Turkish premier Erdogan, who basically, if you remember during the elections and stuff, was a big. Donald praised him a lot too. He's a strong man, but he is doing stupid stuff. He's keeping the pastor there because of political reasons. This is my video. I told you the whole story about why this is happening on my last video cast. He needs to calm down because he's taking his country down the drain. Turkey is a great economy. Turkish people are great. If you ever go to visit Turkey, the resorts are unbelievable. Food's great. Great people. But he's taking them down. So he's got to back off. And I think he will. So that currency crisis is serious. Emerging markets are very nervous. South African rand got hit because of the Turkish situation. This is not a child's game. 80% plus of emerging market debt is in US dollars. So when their currencies are going down, that means they're paying a lot more to service that debt in US dollars. I hope everyone understands that, right? It's like it's like devaluing our dollar. All of a sudden, you're like, and you have to pay in, let's say, Canadian dollars, your credit cards and your mortgage, and all of a sudden, the Canadian dollar shooting way high, like our U.S. dollar is, and then you got to pay and shooting way high, and you have to pay in U.S. dollars versus the Canadian dollar. I'm just giving you an example. All of a sudden, you're like, oh my God. I mean, your financial health is in bad shape. That is the problem with currency crisis. That's the reason the Chinese currency also needs to basically moderate against the US dollar. It cannot keep on getting weaker and weaker. So that's a serious situation. And that's not gone away yet. All right. The rest of the things we know. We have great earnings. US economy is in strong footing. Interest rates are moving higher. Mortgage are dropping. And home buyers are actually getting a leg up because home sellers have to cut prices. That's standard supply and demand stuff. But there's no major risk other than the fact that the Fed gets really nervous because inflation is creeping higher, which has moderated over the last couple of weeks. So numbers that we saw, the CPI, the PPI, and all that stuff, the PCE core deflator, these are the measures of inflation, have moderated. Oil has come down. So the Fed shouldn't be in a rush to raise rates way too high. If they go into a rush, trust me, our markets are going to fall hard. Okay, technicals. It's what we're all about. I just gave you a little flavor on the other side. This, go with the smaller picture first. This is for active traders. Traders like to trade. People are busy during the day. They don't want to follow the 15-minute chart. Fine with me, because that's the way it should be. These candles, beautiful. They're good for 50, 60, 100% during the day. Great. Take it. Reversal bottoms, boom, boom, boom during the day. Big money. You come out at the end of the day, you're like, look at this. I put it $500 in, I took out $2,000. That's how it happens. And many of you do it. I know. And it feels great. Take it down. Next day, market opens up, bang, it goes higher. Like, I should have held it. So what? You took down a nice amount of money. Maybe leave one contract in there. These are the bottoms that you want to buy very, very heavy. Even a child can see that. Right? These are the bottoms. Big time. And going back a little bit. There we go. Oops. That's better. Let me put this in the screen. Let me clean this out. Let me get a color. Makes sense? There you go. These are the bottoms. These are the big hammer reversals. Very easy to see in hindsight. But I'm not a hindsight trader, right? I'm telling you guys to buy when I see these things. I'm telling you guys to sell, take some partial profits or full profits. What does selling partial or full profits means? It means that if you have the ability, you can sell those profits and hold a minor core position without letting go of the entire position. That's what I mean. Some cases, sell the whole lot. I do. These are the times when you don't hear a peep out of anybody in the chat room. Those are the times you should peek into the chat room and say, wow, who's there? Who's chatting away? Who's like super excited? Market's going to the moon and Amazon's going to go up like, to $10,000. When you hear nobody, look at the charts, look at what I'm saying on the Twitter real-time feed and get in there. When everybody's chattering, like, the cacophony of birds, that $10 word, cacophony of birds, the Amazon birds chirping, beware, be cautious, because those are the birds chirping most of the time at these levels. Nobody chirps at these levels. Nobody. Dead silence. These are the tactical lows that you make the big, fat, like we say in New York, excuse my French, FU money. All right? Because this alone is good for 300% on your options or more. And they happen fast because the algos know exactly when to ambush people and when to go way up. Okay? Because they know that's the least number of if you look at the call to put ratio, not put call ratio, the call to put ratio is generally very low at this point. The CBOE does publish the call to put ratio. So the number of calls to puts is generally below 1, because it's always calls are always higher than 1. Most people are generally, most funds and stuff, generally long. The market is generally a long market, right? People buy more than they short more. That's a given. So the call to put ratio is generally lower at these tactical levels, which in this case is an established bottom, which is around 2,800 for now. So that's where you want to get in. So I keep on repeating this over and over again. I'm not here to change your behavioral tendencies, your risk tendencies. You're all grown people. You have families, you have kids, you have dogs, you have cats, you have mice. I don't know what you have. Okay. The fact is that I'm not here to change that. I'm just showing you where it matters. So this is where we are, going back to August. Wow, going back to August. This is August. All right. So in August, this happened. So now you can see here, that was your head. Here was your left shoulder. Here was another left shoulder. Remember, markets are not linear in the sense that they're not textbook, like there's going to be one shoulder and one head. They're what we call complex head and shoulders, which means there are multiple, right? And in between, there are inverse head and shoulders and all that kind of good stuff that I keep on showing that you guys can trade off and make money. So you have left shoulder, 1, 2, right shoulder, 1, 2. So what we did on Thursday and Friday, we broke out of that shoulder. Is that a confirmed breakout? I don't believe in confirmations anymore, but I do know that that's a positive from what we have seen. And I called it. And many of you took advantage of it. And I'm very happy about that. Nothing makes me happier when a lot of people make money. Did we take full advantage of it? Nope. Some of you didn't even take advantage of it. Well, that's a tragedy. I can't help you with that. Did I take complete full advantage of it? Nope. That's why there is nothing called perfection. You just constantly keep on improving yourself. So these are the charts that make a lot of money. And once you catch one of them, your whole mental calibration changes. You don't make silly comments like, oh, this is a seasonality thing. This is what happened. This is what happened. That's the cacophony of little gerbils and the squawking of parrots in the Amazon jungle. I'm getting very lucid here with my descriptions, right? But really, it doesn't matter. Saying the tired old retail terms, oh yes, this is what happens then, this is what happens then, it means nothing. Make money at any given moment. These are obviously the perfect moments when everyone is just deadly silent in the bunkers, SOA, diapers, that's my term. But these are also great money-making opportunities. And I keep on showing that repeatedly every day. So this is definitely a positive on the short-term chart. You can clearly see what's going on. Futures are down about half a point. In fact, I want futures to be down at the open tomorrow. So we have the resets. This is a 15-minute chart. So let's get into the technical so you know how to read my charts. Look at what's going on here. It is resetting. It's a 15-minute reset. It's a quick one because the futures rate is very active right now, or somewhat active. Let's look at a 1-hour chart. The 1-hour chart is now up there. As you look at these things more and more, as you trade my charts more and more, I can only assure you, the only thing I can guarantee you, I don't guarantee anything in life, right? The only thing in life, we don't guarantee anything when it comes to trading. One thing I can assure you and guarantee you is that you will get to see the nuances of all these different indicators. And the simplest one to follow is the stochastics. And you will see, like, you'll get this gut feeling like I do, like, okay, this one's not going to collapse all the way down here because of different candle structures and stuff. That's the reason why you guys all have to listen. There are brilliant resources on YouTube. And I put 2 of them out there that I came upon them this weekend. And I even listened to it. basic candlestick reading. Listen to it. If you don't understand candles, you're not going anywhere. You know, you're not going to a Pier 1 or TJ Maxx to buy nice candles for your house. These are candles that make you money. Light the fire, all right, in your P&L. So bottom line is the 1 hour, you can see that again, head, shoulder, shoulder. We broke out of the shoulder, and now we are creating. And aside from Lisa, can somebody tell me what this pattern is? What is this pattern?
Bull flag.
Thank you very much. It's a bull flag. Can't deny it. Same pattern here. Flag, breakout. Now, what happens generally, what I've said that from a long time, is anytime we go into a consolidation channel, which is profit taking, because Clueless 8 type of tactical traders, we generally tend to buy here. We tend to buy here. We tend to buy here. Another bull flag. So what happens is along the way, we take profits. As I show on my quad algorithmic high frequency trading charts, the really serious ones, those levels, you know, when the slow stochastic's getting overbought on the 1 hour, that there will be a reset on the fast and slow. Well, these are called profit-taking channels, identified on these charts and predicted on the quad QUODD, which some of you have started the free trials. Nothing to do with me. Anybody interested? Let me know. I'll send you the information. Call our quad. Get that. Brilliant. That's called driving Lamborghinis. All right, serious stuff. And you can they're predictive. So that means you can make money of them before it starts to happen. And as you read them more and more, the better. And when I'm putting those quad charts out there, you're acting on them rather quickly. So anyway, this is a bull flag. So the same thing happened back from the first week of August. We got these consolidation channels. This is when most of you freak out. I'm telling you, there's a reset going on. Listen, this is not child's play. You got to completely think differently. I know we have a lot of new members. Some of you are not technically orientated. That's fine. In fact, if you have less baggage from years before and you knew nothing about technicals, you will be the best traders in a few months. And I'll throw in my marketing plug. Take the advanced coaching sessions, and that'll push you to the next level. You will have far less baggage. You will learn things in a new way. You will apply your own gut instincts and other people that you follow and stuff, and you will see the difference on your P&L. That is almost assured. So the bottom line is that this is the same. The pattern recognition is key. To me, pattern recognition comes somewhat naturally. I look at a chart and I start to see patterns. All right. So here, beginning of August, with the same thing, consolidation, boom. Every time there's a consolidation channel, traders freak out like, oh my God, what's going to happen? Now, we do know that in a very volatile market, a consolidation channel can also create a flash crash, like what happened at the middle of the month, which is generally what happens, right? So we went up. This is a consolidation channel. Wake up in the morning, bang, down. Did that change the whole format of our trading? No. In fact, it gave us a phenomenal opportunity to buy the market and to short along the way intraday. I don't like keeping shorts overnight. I don't, because in a bull market you can. I've done that before with limited amounts of money. I've lost it all. Because once a technical reset happens and the stows go all the way down here and you're short here, I don't care what your mind says. I don't care what CNBC says. I know, you're feeling like, oh, yeah, we're going to go down more. Yeah, most we could go down, but it's a couple of points, and that's probably going to happen pre-market or right at the open, and then the market's going to bounce. Except in this case, it hit the upper end of the buffer. It didn't even test the 2791 level, which I said would possibly be a very tradable bottom based on the pattern symmetry that you guys can see right here from the 2nd of August. It didn't even do that. And you know why the algos didn't do that? Can somebody tell me why? Let's see how, I'm not testing anybody, but I'm asking a question. Why didn't the algos take us down to 2790, create a very, create and start the massive rally right from this level which was also a downtrend line channel. I mean, I can see that. But why didn't it go down to where it was on August 2nd and then turn around? What is the simplistic reason? Please think. I want
Money?
you guys to think. Money is not
Money.
an answer. What are you, an Oprah show? I mean, what kind of answer is
Yeah.
money? What you have? Let me finish. You're actually in the right direction in answering my question, but
Yeah,
explain.
puts. People were betting for more down, so they took it up.
There you go. Remember, when you're explaining something to somebody, imagine that you're explaining to a 5th grader. So you have the right direction. Yes, that's the answer. Who's that, JP?
Yeah, that's me.
There you go. Exactly. Because the concentration, everybody was bulked up on the put side, and the shorts were betting heavy that we're going to hit this beautiful technical perfect level. Markets, that's why I always sell early. Like when I'm getting up there, I'll probably be a big seller around the 2860 level, while people are getting way too excited thinking that we're going to go all the way higher, which we most probably will. Because after that, we're going to look at the daily chart. But I always sell a little bit early. Just the way these shorts, the smart shorts, sold earlier. They sold here at the close that day. You're right. So did everyone understand what JP said? It's not rocket science, guys. And if you guys don't know that simple answer, this is a behavioral thing, then you got to start thinking like that, please. Please. Because everybody's betting, and the big money is betting here, so the algos decide to turn from here, leaving them completely obliterated. And when these turns happen, they happen fast. I mean, really fast. You buy a $2 call, $3 call intraday, or for the week or the weekly ones, and they're at 4, they're at 5, they're at 6. Okay? Thank you for the answer, JP. So I want everyone to start thinking, guys. All right? Because if a trader who doesn't think is a dumb trader. So they'll make money off my alerts. Sure, you can buy something and just swing it and make money. But when volatility hits, those non-thinking traders, emotional traders, who make banal statements about seasonality and all that stuff, they're the ones who get screwed big time. And you know exactly what I mean. Try to be as robotic as possible. As robotic as possible. But real money is involved. I know the human emotions that come into play. The crappiest I feel at tactical lows, the more money I make in the following 24 to 48 hours. That's a fact. No question about it. And that's when nobody's to be heard. All right. That's your answer. Thanks, JP. Next move. Daily. Daily charts are completely fine. Now, does that mean we can be down 100 points in the morning because of some news that comes out of China? I explained this to one of the ACS students that who's in here tonight, and we were discussing it. And I said, what did we get a report of China saying? You know what? We're going to delay our visit end of the week, which, by the way, happens to be the same day the Chinese delegation visiting is Alibaba earnings. Ooh, is there some sort of coincidence there? Is it going to be a done deal? Are we not going to get some harsh comments out of China Communist Daily or Donald going loopy at 6 in the morning? That's serious. I'm in New York. I have a right to say whatever I want. Any of you Midwesterners and West Coasters who follow my boy Donald, you have no right to say anything because you have no frigging idea what happens in New York. What happens in New York stays in New York. All right? Trust me. You guys are buying a dream. We're buying a reality because we know what the reality is. Because our New Yorker is running the show, and he's a little loopy at times. Okay? Whether you like it or not. So you don't think we might get a tweet? And boom, markets are going to be down 300 in the morning. I hope not. Doesn't matter. I'm not that heavily thinking. I got some BABA. I got a couple of those strategic alerts. Things that are out there. Okay? So get ready for it. So here, technically speaking, barring that we are not going to get any wild gyrations from Turkey, from the currency stuff, from China, because China's got real problems, guys. All right, China's got some real problems, but it's a managed capitalist economy, just like Russia. Russia's in deep trouble, by the way. Putin's economy is in deep trouble. I was talking to my Ruski guys this weekend. Great guys, these guys are big shots, all right? They do business here, they do business in Russia. You're talking like serious FU money, all right? And they're not happy what's happening with in Russia with the ruble and everything. So bottom line is, I'm adjusting this a little bit. Bottom line is that the Russian economy is in real trouble. And oil dropping, that's their biggest export, oil and natural gas to Europe. They're very worried. So, and then we put in some sanctions and stuff, and all kinds of stuff going on. Russia doesn't like this currency crisis at all because it's killing their ruble. So bottom line is that there's a lot of risk out there. But let's look at the technicals here. U.S. markets are faring the best. And one thing I wanted to add as we move along is that this is truly a stock market, which I mentioned to my great ACS student this morning. Why? Because stocks that are doing well, great earnings, great guidance, they are getting rewarded big time. Big time. Stocks which are saying cautionary stuff or crappy earnings, blaming this and that, excuses, they're getting slammed. And great companies like Deere, if you read their report, which I actually did, I don't like reading reports anymore. I left my old days. I know more about reading balance sheets and income statements and earnings and sitting in conference calls than all of you put together, okay? Trust me. I read body language through the telephone, all right? So bottom line is that companies which are kind of trying to make a lot of excuses, they're getting slammed. It's a true stock market. And you see that every day. Some stocks just going through the roof. Some stocks are remaining flat. Some stocks just generally following the market up or down. This is a real stock market. That's why these charts take preeminent importance, not just because of the algorithms, but because of the fact that the stock market is behaving like a stock market. It's a market of stocks. All right. So saying all that, this is a damn good chart. We don't have that much to go. This is the upper end of the channel. You can see that. The upper end of the channel is somewhere around 2880. Do I think that we're going to get is it going to just hit it there and then immediately create a pullback? Yeah, most probably. Because from 2853 that we closed at, or 2850, wherever we closed at, to 2880 is 30 points, times 7 is 210 Dow points. We get another 210 Dow points, multiple indicators. That's 210 Dow points, by the way, on the Dow Jones Industrial Average, not on the S&P 500, is going to be severely overbought. And just by simply following the daily chart, once we get up here, either we move sideways, like we did back on in July, which means we have a continuation of a rally in between these 100-point down days, or we do an immediate reset like we did at the first week of August. So that's for me to determine as much as I can and for me to alert so you guys can understand. So I don't know whether this is going to be this. And this is going to affect all the major stocks that we trade. Not the selective ones, the major ones like the Boeings, the Deeres, the bigger names, the Apples. So it goes up here. We can do an overshoot because once you pull this down, we have an acceleration channel right there. Right there. The upper end of the acceleration channel is if we make a real gangbuster, kill the shorts, massive short squeeze type of thing on the Chinese delegation news, and Donald actually, he hugging the Chinese, the guy who's coming, he's one smart cookie, U.S. educated, really smart guy. And Donald says, he's my friend. And, how he talks. Yes, I like him a lot. We had great conversation. Market's going to go whoop. All right. And that would bring us up to that, what level? Upper end of this acceleration channel. You see the acceleration channel, guys? The blue line, right? That's how you read my charts. 2920. 29.20. Yeah, 29.20. So instead of going up 210 points, we could be up 400 points. But at one point, you need to reset. Now, the reset doesn't mean, like many people on StockTwits and other trading forums, like, oh my God, the market's overbought. Now we're just going to go straight down. It doesn't work like that. We're going to come down, we're going to retest, we're going to come down, and I'm going to guide you guys like I do every single day all along the way. But there's climactic type of traders, and I'm sure some of you know them well. They're like, that's it, now it's over, now we're going to just crush 2,000 points. Like, why? Like, what is this Armageddon scenario that we keep on hearing? This was a black swan event. These things don't happen. I've been in the stock market for a long time. Worked on Wall Street, right? I mean, you guys know that. I'm not saying that a feather on my cap, but boy, I did. Okay? All the way from the 1996, 97, all the way down to the end of 2010. That's a lot of years. All right? And I was a trader. I was on the portfolio management side. So I understand, how money management works. And I wasn't the kind of guy like walking in drunk at 10 in the morning. I was there in my office at 6:37. Loved what I did. So what I'm saying, take it seriously. These are black swan events. So a lot of these guys, 99.9% of them or 100% of them, traders that you guys follow or read, and they're very smart, a lot of them, they're great traders. They have no idea how the money management sector works. They don't know how Wall Street works. They don't know how the mutual fund complex works. So they just look at the trading aspect of it. That's where Clueless Day Trading shines. We understand the back end of it because I was there. Money managers don't just freak out and sell everything. Hedge funds do. Hedge funds blow up. When was the last time you heard a mutual fund blow up? Think about that for a minute. And they are the 800-pound gorillas in the market. Even through this crisis, did you ever hear Pioneer funds or Fidelity just blew up? No. But you hear bits and pieces of some small hedge funds, European hedge funds, some U.S. hedge funds who were literally oversized, betting against the vol trade, betting against the VIX or something like that, or betting against the stock. And then when Apple shoots higher, they're just like, oh my God. Hedge funds blow up, guys. Mutual funds don't. And mutual funds control 80% of the overall money because that's where pension funds invest. That's where your money, the 401ks and stuff are managed. And they are not freaky monkeys on hot tin roofs. Think, guys, think. What I'm telling you is stuff you guys don't know. So mutual funds don't just let go of a Google and say, see you later, we'll never revisit you. Of course they're going to buy it at certain levels when they fall. Facebook, it's over, it's going to go to 150. Bullshit. Unless there's another major thing, they are buying all the way through. They don't leave these companies because they're iconic companies in their own field. Small biotechs, small companies which have one-trick ponies, yes, they'll dump them. They won't see them. The mutual fund just writes them off their books. But the big ones, nope. Just the way they said, Apple, no iPhone demand, Samsung's taking over, Android, which sounds like a frigging insect, taking over. And then what does Apple do? What do we do with Apple? We ride it to new highs. So, saying all that, you can see directly from my chart. One step at a time. We get up here, we are hitting the upper end of the channel. If we bust a real move, the most we'll get up to about 29.20. Can we get there by the first week in September? Yes. My projection is that by after the first 5 to 6 trading days in September, not calendar days, trading days, which is the September starts off. The first trading day in September is the 3rd. 3rd, 4th, 5th, 6th, 7th. I'm giving you exact calendar count. 7th, 10th. By the 10th or 11th of September, the market has topped. Okay, that's my reading. Short-term top. So I'm going to write it down. Market top, based on my estimation and my charts, is September It won't be September. Market's not going to top before September 11th. So I would say 13th. Because what happened on 9/11, the market will not crash. I'm a survivor of 9/11. I know. They will not let the market crash before 9/11. It will come after 9/11. So September 13th and the following days and the second half of September most probably will be a nice fat move down. Mark my words. If I'm wrong, so what? I think I'm right. All right. And by that time, we'll have ample time to cover this zone, which is max move 2940 or so. That's your bigger picture. Let's move on, and then I'll take some quick questions. So this is what we are. This is where we are right now, looking pretty damn good. This is your SPX chart, not real time. This is your head. This is your left shoulder. This is your right shoulder. We broke out of it with a bullish engulfing candle. A minor pullback as long as it's an inside day, meaning the red candle doesn't completely go below the previous day's green candle. That's still an inside day. We should be able to retest 2864. That's short term this week by Tuesday or so. Once you hit there, you're going to come back and retest the breakout, which is again 2853. And then if we do bust a move, we're looking at 2875. And the upper end of it, that's the reason why I draw these charts. Upper end of it, you can just move your cursor up, is 2887, 2890. Same numbers that I just showed you on the E-minis, thereabouts. Is everyone clear on this? Yes?
Yes.
Okay, good. Just showing you the roadmaps. You know how to handle your trades as we go along. When I'm putting stuff in there, you're not freaking out because we're down 50, 60 points. A standard retest could also be 2840, which means we're going to fall 10 points very quickly over the by Monday or so. Pullback would be fantastic. Remember, this is a gap fill. Upper end of the gap fill is where we turn from. And if we fall into the gap fill, the lower end of the gap fill is 2825. Nothing to be alarmed about. If we go to 2825, this 1 hour reset on the SPX will come down like this. And you want to be buying. I don't like using the word hands down, but you need to be buying at that point. That's a nice buy zone, because every time it gets this the resets happen at the low level, just like an RSI. Okay, you get a sharp bounce. The bounce might last during intraday, or the bounce might last 24 to 48 hours. That's it, and you make a lot of money. So far, this is where we are. What would be really bullish is we take out this head, which is a bearish head and shoulder pattern. We take out this head. We move into this zone between 2665. This is actual S&P 500. 2865 to 2875. At that point, the shorts are like, okay, that's it. I mean, I'm talking about the hardcore shorts because they know that the market wants to head towards 2900. So this would be a very bullish move if we can get into this zone. We shall see. This picture is a much longer term picture. I've shown you this picture. It looks pretty damn good. And this goes back. This is 2018, by the way. This is where we started. 2018, right there. This green candle. Because the day before, the last day of December, we actually fell pretty hard. Everyone's like, oh my God, it's all over. We were long. Look up my video. We were long. We weren't crazy long, but we were moderate long. And the market gapped open 14 points. 14 handles. And then it made the big run where mom and pop got super excited. Everybody in the chat room, there was like a lot of people in the chat room screaming and shouting. And this is called wave 5. Wave 5 is called euphoria. Too much happiness. In trading, don't get too happy because you make a lot of money. Don't get too happy because you lost some. Just stay even keel. Be an actual Marine. Be a fighter. Be a warrior. Don't let your emotions get like, oh my God, it's great. And then, oh my God, I can't even look at the market. No, stay calm. Stay calm. It's good for your life too. Don't be a manic depressive. Just stay calm. Make a decent sum of money. thank God for it, give some away to your favorite charities, and just sit back, have a nice glass of wine, and just tell yourself, I did my job. Don't get super excited, ever, both on the upside or the downside. Don't get super excited. Don't get super depressed. Make money in the middle. Because the markets want you to be super excited and super depressed. That's why volatility is created. So they can make money off it. So this is pretty damn good looking chart. This is your zone where the new highs are established, or testing the old highs, which were just around the corner. And then, of course, this is the zone of, I would consider, euphoria, where by 29.16, 29.20, in my opinion, given all the technicals and stuff, it'd be a nice fat short, because everyone's going to be excited. CNBC is like, yeah, we're going to 3,000. You know, all these idiots come on and they're like, you know, oh, I'm going to buy Nvidia more now because it just turned around, went up 20 points. As the stock has done many, many times, you want to be like, okay, give me the profits, and then put some nice shorts out there. All right. Quickly, just mentioned it's 10 o'clock. I think we started at 8:45, so I've gone a little bit more than an hour. But please, go ahead and ask any questions, please. Anybody? No one wants to know anything? Okay. No questions?
Yeah, this is Walter. Hey, what do you see for Google coming up short term?
I can pull up the chart of Google and let's take a look at it. All text got sold, as we know. And this brings me to a point here. You have to diversify on the trades that we do. Okay? And that's not just applying to you. I'm just saying in general. We bought some Google at the close on Friday, as you know. Google's chart right now looks like this. To me, as long as the tech side, which basically was a victim of generally margin selling and stuff that happened aside from Apple. Let me just walk you guys through Google. So this is Google's chart. We have traded Google pretty successfully. We have been caught on a couple of these traps also. So Google right now is looking to me, and part of the reason Google also fell because they said that they did not have any major headway in the China game, right? So that was another reason. So Google has a major support at 1200. Very simple, 1200, 1204. On a tactical trade, the stock basically can get up to about 1240, which is this, which is within this range. That's the max that I can see right now. In the meantime, the stock can also pull back to the 1204 level, create a double bottom. This is also a gap fill. So this is a major support level. Google below 1200 would be, you know, or would basically get the stock at that point. Let me see here. Would be talking about a different ballgame. Google below 1200 would drop to 1182 real fast. But looking at this picture here, Walter, I can predict what the sentiment of the overall technology side is. My favorite technology stock, aside from Google, is Apple. One second here, because Apple's chart is very clean, and so this is it. This has been a major point of. This was a breakout level. Breakout levels do get tested, and that's exactly what it's doing right now. So in answer to your question, follow my charts. The first line here is 1228. The next line here, which is the gap fill up here, is 1240. So this is the level that I'm looking at on a favorable tech environment on that. A pullback to create a double bottom is also possible at 1205. And given the fact that we're nearing the end of the month, the biggest unknown is, will there be window dressing, which I believe there will be, because these stocks have sold up so much. We have traded Google very successfully on each of these moves. So if there is window dressing, Walter, you're going to see the stock at 1240, if not closing the gap up here at around 1250. Next question.
Thank you.
No problem. Now let me show you a chart while I'm waiting for the next question. This is the type of chart you want to buy with hands down. Hands down. All right, John Deere, 2,000% almost intraday. I know some of you nailed it with me. You buy 27-cent calls, 30 cents call, 40 cents call, and they go to $4 to $5. What more could you ask for? If you sat around and did not act on this chart, you are a bona fide idiot. I'm dead serious. I'm dead serious. What is there to superanalyze? The stock started to turn, and this is the simplistic version after the fact. I showed you repeatedly the charts on the reversal, the hammer building. So buy, 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 buy. As the conference call went on, and I read the report, by the way, early in the morning, and the minute in the conference call, they started saying they're going to raise farm machinery prices. They're seeing better demand. The shortfall on their shortfall on their guidance was soybean crackdown because of tariffs. Soybean farmers and corn farmers are getting hit like big time. And believe me, good old Donald Trump, my boy from New York, is not going to sit around and watch the farmers die. Dead serious. Okay? So one with the other. So anyway, they talked about higher machinery prices, agricultural demand, blah, blah, blah. Stocks started turning. This is the stuff you want to buy on a reversal basis. That candle is 14 points. That's billions of dollars. You're not talking about a puny biotech stock. You're talking about John Deere. Same thing happened with Boeing too on earnings, by the way. Reversal, fat. So this is basically what's happening with this. And I've shown multiple charts on this. When you buy, and look at the volume, 8 million shares. Like, oh my Lord, that is sick. And on top of that, it's coming off a triple bottom. So let this be a lesson learned. Remember, it's not where you're coming from. It's where you're going. Just the way it's not where a stock is coming from, where it's going. So yes, you might have made some idiotic move by not buying this and making a ton of money from small amounts of money on Friday on the earnings. Let not that be the baggage. Move forward. Buy the stock as long as the technicals are right. And if the technicals are not right and it creates a massive red candle here like this, then obviously I'll be the first one to warn you guys to get the heck out of Dodge. But if you're not in it, here's your second chance. Because when you get this type of candle movement, please, a child would buy this. Okay? You might get a quick pullback in the morning. This is generally a 3-candle move. The 3-candle move should take us to 146. The best part about the Deeres of the world is that the calls are so goddamn cheap. You can buy them at $1, $2, 40 cents, 50 cents. You don't have to pay $8, $10. People are like, oh, let's go buy booking. Relax, dude. You buy, okay, we made tons on booking because it went nuts, right? I called it. The $3 calls went to 23. But in general, their calls have very fat premium. $7, $8, $9. Because I don't like buying way out of the money. In this particular case, with these New York Stock Exchange type of companies, you can buy them at a fraction of the cost. So if you bought a Deere call at 2, which we did the day before, and it goes to 40 cents because the idiots brought it down here and it starts to turn, we keep on buying 50 cents, 60 cents, $1. All of a sudden, your cost basis is $1.20 instead of 2, and then it goes to 5. So let's say you're at 10 at $1.20. That's $1,200. This is the reality of what happens a lot, not just on Friday. Then you can sell it at 5,000, or let's say you sold it at 4,000. How good do you feel? You feel great. And all of a sudden, you'd be really tracking my charts like a hawk instead of making banal comments in the chat room about idiotic, what happens during the year. Follow the charts. In fact, make it simple. Follow the arrows. So this is the type of stock that you want to buy. Now, if there's a complete reversal and this whole bullish engulfing candle from almost 9 million shares is negated, different story. So this is the pattern. So you still have a chance because $6 from here means you make 200% plus on your money. And God forbid that we do have a reasonable civil conversation with the Chinese trade delegation. I wouldn't imagine. I mean, of course, remember, no trade delegation comes all the way up here to DC without without the real guys talking on behind the scenes, setting up the stage, right? You guys should know that. So they're not going to come here and get slapped by Navarro and Malpass, two of the real hardliners on China. I'm sure they should be welcomed by Mnuchin, my boy from Wall Street. He's the best guy out there when it comes to trade. All right? I don't care what your feelings and thoughts are. Hardcore protectionist measures never helped anybody. It will never help the USA either. The farmers are dying. And if you don't believe me, go read up on it. Yes, to support Trump and our president and his overall policies to make American exports better, but they are dying right now, and a lot of them are like, you know what? I don't want to vote for this guy because if he's going to make us the frontline mincemeat with our biggest customer, China, and we're gonna go back to the nightmare of the 70s and the 80s. I think it was the 70s when the agricultural famine happened, where farmers literally lost everything. They're like, no frigging way am I going to vote for this guy again. And you honestly believe that Donald's that stupid to lose the whole Midwestern corn belt, farm belt over this? You cannot keep on slicing your biggest customer. So I think good things will happen. I think this stock's going a lot higher. And my technicals are showing it. And if it really goes well, the trade delegation, and they think, like a civil conversation, we're not going to, China's got a lot of things they need to fix. No question about it with us. So we will get here. And boy, that's a lottery ticket. Just the way people who acted on my alert made a lottery ticket on there. Okay. Any other quick one that I can look at?
How about Netflix? Do you think we'll find support anytime soon?
Oh, you always find support. That's a very good question. You always find support on those stocks, okay? Of course you'll find support. Netflix is one of the finest companies in the world. We have made crap loads of money on Netflix from $150, $200. Okay? So let's look at Netflix. Who asked that question?
Todd.
Oh, okay. Todd. Who's Todd? Oh, Todd. Yeah. We had another Todd here, Trent, my buddy. He's been really busy with his business. So that's why I'm thinking, oh my God, Todd's here. Netflix, look at the chart here. Okay, let's stick with charts, Todd. All right. Netflix basically was a victim this week, just like any other tech stocks. They were all under a major sell program that mostly came out of Europe. Okay, just so you understand that. So Netflix is right now getting to be a screaming buy. I mean, literally a screaming buy. You scream, you buy, you scream again, you buy again, that type of buy. So all kidding aside, let's take a look at this is your daily. Fundamentals on Netflix didn't change one bit. It's one of the fastest growing companies in America. They haven't even cracked the foreign markets yet. So let's not worry about the fundamentals and what these garbage guys say. They've been saying Netflix should be a $10 stock from years ago. All right? And Reed Hastings showed them all. I like it a lot. Thanks for bringing it. Look at what's going on here. We are starting to see the formation of a double bottom on the full stows on the daily. That's all you need to know. This is the daily. Now, the question is, the stock will go higher. So the question is, where do you really lump in? Well, you could start scaling in right now, or the most optimal buy zone would be where we were in April, which is around 320. Okay? Now, can you short it for 14 points? Yes, you can, but you better watch your pants because when they turn fast. All right? And just the way here it was completely breaking down and it started turning and the stock went up $7. So that's the reason I prefer not to short the market via these stocks. I prefer shorting the market via the SPX and the SPYs and the Qs and such. Okay? So coming back to Netflix, best optimal buy scenario would be 320. I doubt if we get it. We can maybe. But even here, you can start scaling in. When you start scaling in, you buy your first call at that level. You wait to see if it pulls back a little bit. And then you buy one or two more, bring your cost down, and then you get these massive moves. But at this point, the internals are clearly showing us that the stock is deep oversold on the daily, for God's sakes. And every single time it got this deep oversold, the stock rallied a good 6, 7, 10 points from that zone. And so far, it is starting to look like a falling wedge, which is generally a pretty strong buy signal. Let me see here. Yeah, that's a falling wedge. Does everyone clearly see the pattern? Falling wedges have a 90% accuracy of working, which means the shorts are piling in here. Stock might slip a little bit outside that, and all of a sudden you're going to get this move, a breakout. If it does break out, you know what the level is. The first level is 344. That's why this line is drawn, because that was the breakout level from back in May. And then if it really busts a move and the text, then the upper Bollinger and the text all catch fire on a certain day, Amazon up 30, 40, then you get the 370 level. I was pushing the 360 level, and I still think we get to 360. Just have to keep on rolling them out. Again, I like the industrials where the big money can be made right now. These things are fine, but techs are under pressure a bit. But end of the month, the fund managers tend to buy these things back to show them on their books. And internals are clearly showing that the stock is in a major bottoming pattern. Next question. Thanks for your question, Todd.
Sure. Thank you, Frank.
No problem. Anyone?
No, I'm good. Thank you.
All right. So I hope you guys found this helpful. We covered quite a lot of topics. And just remember one thing, guys. We're all in the same boat. And I mean that. There are days that I wake up and all my great, perfect charts and stuff from the day before look like crap. And those are the days we make the most money. Seriously. Always got to have some cash on the side. Never be fully invested. And you got to get in there when things are happening. By the time things have already happened, you get in there like you're used to doing that same thing, confirmation stuff, you're going to be mincemeat. But the days that you get these flash crashes and stuff, we have had our best days on those days. Not because we were fully loaded short, because everything looked good here. So we might have a small VIX call or maybe a small S&P put. And then that works out. We're like, oh my God, why did we just short the market? I don't think like that. This was a black swan event. So what do? We start scaling in, and within a matter of hours, if not a day or so, we make triple that amount back. That's my style. You do your style. I don't care. My style is in a bull market. This is a bull market, okay? In a bull market, you want to short with tight time frames, and you want to go long with longer time frames, or take money intraday, whatever the case may be. You want to stay long on a swing trade. You want to keep it overnight on the long side, with the short side being played a little bit hedges, maybe the night before, if the charts are breaking down, or intraday you trade short and make money. That's my opinion. Once the market trend changes and the market looks like this, then we keep on selling and shorting every little bounce that happens. Does everyone understand that part? Does everyone understand what I just said?
Yes.
Now, one last question I'll ask you guys, and I just want an answer from anybody. And I'm not a crazy bull. I'm a tactical bull. Does this chart really looks like we're going in the gutter? Seriously, everybody just answer yes or no. Your honest opinion. Does this chart look like we're going in the gutter?
No.
No.
Not right away.
Exactly. So on that note, let me just say one thing. And we're all in the same boat together, guys, and you guys are fantastic, okay? You guys are what makes real estate trading. Honestly, I mean that. All right? So if that's the case, why aren't you guys acting on it more forcefully? Think about that for a minute when you go to bed. We're in a friggin' bull market. And everything that you have sold in panic has doubled and tripled. So given the fact, sometimes you just got to look at it very simply. The market is on a major uptrend. I think this is one of my, this Andrew's pitchfork that I drew. It just took me 3 seconds to draw this chart. And I looked at him like, holy cow. It woke me up. I mean, I know the markets were looking good. I can show all these S&P charts. But this is the simplest chart. So if the market, you feel, just doesn't look like crap. Yes, we get these red days and stuff. Then act accordingly. act accordingly. That's called mental calibration. Don't get too uber bullish, because I've already explained the term, but certainly don't look at every little drop as the start of a bear market. We're not going into a bear market till 2020. Mark my words. And when big drop in our market, it's a nice reset will happen in the months of September and early October. So act accordingly. Have a great night, guys. Let's have a great week. Like I said, trade with eyes wide open. I'll keep on doing what I'm doing. You guys do what you need to do. God bless you all.
Have a good night.
You too.